I really did believe in hyperbitcoinization, that this thing was going to be gravity that sucked all value into it, infinity over 21 million, these kinds of number go up ideas. I don't think that's realistic anymore. All those caveats in there are true. Like, you can't just say Lightning is strictly better, it's cheaper, and everybody should use it, and there's no trade-offs. There's tons of trade-offs. Honestly, the only political or white market behavior I can justify is fighting for Bitcoin rights. In other words, putting it into law that I can have a Bitcoin wallet, that I can, sell anything I want, sell for Bitcoin instead of for dollars, or things that I'm explicitly allowed to do instead of rules about how I can do things. It's meant to be a black market money, which means operating without permission. And the government there is to enforce, laws, permissions, and to enforce them with violence. So like Bitcoin can't do anything about violence. So we have to be careful with the power that we entrust in the government and how they interplay with Bitcoin.
Before we get started with the Bitcoin topics, a quick overview, like what are you doing in Bitcoin and what is for you the most important aspect of Bitcoin?
So I've been in Bitcoin since late 2012. So I don't know, about 12, 13 years. The most important thing I do is Synonym, our company. And basically what I try to do both as a Bitcoiner and as CEO at Synonym is separate all of the kind of bullshit and narratives and claims into, more realistic perspectives and understanding of both Bitcoin, to then be able to have more interesting things, at least interesting to us, to build at our company Synonym by process of elimination of the things that don't make sense.
You're building solutions for Bitcoin, or what is it then?
So the vision of Synonym is we're building something that we call the atomic economy, which is just a concept, and it's most similar to the concept that maybe some of your audience has heard as far as the concept of hyperbitcoinization, this idea of a future where like everybody only uses Bitcoin and everybody pays for everything in Bitcoin, and Bitcoin is the only money. That's the kind of extreme, short version of the idea of hyperbitcoinization. Well, atomic economy is a more abstract idea that's related, and simply just what is a way that we could actually design a society intentionally and tools that people would use to replace the systems that currently oppress us, not just the money and banks, but also, big state and big tech. So we try to basically, create an ecosystem of software and open protocols that people can use to replace big tech, big state, and big banks.
So in a sense, it's almost like a parallel economy that you're trying to do.
Exactly. Yes.
Really cool. I like that. How do you look then at, it seems like the current system wants to integrate Bitcoin and not like the other way around. How do you look at governments, big corporations, big tech, and all those things trying to incorporate and integrate Bitcoin in their lives, like the ETFs are so popular and stuff like that?
Well, it just depends on what the context of the conversation is, right? Like, you can't fault a bank for trying to do bank things, or a Wall Street investor for trying to do Wall Street investor things, or an ETF company for doing ETF things, etc. So I'm not saying anybody should or should not be able to do these kinds of things. It's what they do. But I don't consider legacy finance adoption of Bitcoin to be scaling of Bitcoin in any sort of, practical sense. I consider it to be, a scaling of banking, or, into, new products and new technologies. And so when we talk about scaling specifically when it comes to Bitcoin, I don't include, things like custodial growth or state growth. State growth particularly is one that's divisive, because the state is like the worst enemy of Bitcoin, and seeing people embrace politicians and the states consider things like a strategic Bitcoin reserve or special regulations for Bitcoin, I think that some Bitcoiners may find that those things are less desirable than they thought they would be.
Yeah, especially now with the shitcoin strategic reserve that they're doing.
Right. Like, you're not going to quite they're politicians. They're there to pander to the people that are the most powerful near them. They're not there necessarily to like make you rich. And so, if that's what you think is going to happen, that somebody is going to make you rich, then you have the wrong idea about it.
It's a weird concept of cheering for governments to be more powerful with adopting Bitcoin, and it's almost like a good thing that they're also doing shitcoining, so they don't accumulate too many Bitcoins, so the government doesn't get to good of that.
Yeah, I see what you mean. I don't know that I would word it that way, but I do see what you mean, and just that I think that delaying government involvement and just ignoring government as much as you can is one of the better strategies, only because the government is just antithetical to Bitcoin. It's meant to be a black market money, which means operating without permission. And the government there is to enforce laws, permissions, and to enforce them with violence. So like Bitcoin can't do anything about violence. So we have to be careful with the power that we entrust in the government and how they interplay with Bitcoin.
Do you think we will come to a state where this like black market, this Bitcoin, hyper-Bitcoinized system will be the only one where we kind of get rid of the other one?
No, I think that that's kind of a naive idea. I used to subscribe to the idea myself in the early years of Bitcoin, where I really did believe in hyperbitcoinization, that this thing was going to be the gravity that sucked all value into it, infinity over 21 million, these kinds of number go up ideas. I don't think that's realistic anymore. I think that people, treat Bitcoin like another option for money, another option for, speculation, another option for quote unquote store of value, maybe even exchange, currency, whatever you want to call it. It can be any of those things to any of those people, none of those things to most people, whatever. So I think that there's always going to be like competition across monies and places to put your money and speculate. So, and it's an advantage. Like we want competition. It's a natural thing to have competition. Like the first thing that would happen in a world where only Bitcoin existed is somebody would invent another alternative. Like, you know what I mean? Somebody would say, oh, you like Bitcoin? Well, you could do this instead. And then there would be an alternative. So you can't really like force the vision of hyper-Bitcoinization so much as maybe modernize the idea of Bitcoin maximalism to be maximizing as many users doing as many transactions as possible in Bitcoin. And that's all you can really do. There's going to be a limit, though, because Bitcoin doesn't scale very well.
Interesting. And I want to get into the scaling of Bitcoin also, because I think it's really interesting. But first, like staying on that topic a little bit, how would you determine if Bitcoin was successful in the future? A lot of people say like, oh, like Bitcoin needs to be the money, or like, oh, Bitcoin needs to be a debt adoption rate. Like, how do we determine in the future if Bitcoin is successful?
Well, I mean, what is successful is subjective, right? Like you define what the qualifications are that need to be met to whether you define something as a success, right? It's your own outcome. So you define whether it's successful. I personally define it. It isn't something that we're all going to be able to look at and say, yep, we were all right. It's successful. I mean, you can kind of do that in the sense that the price keeps going up over, a 15-year span and such. But, whether it's successful is simply whether or not it solved the problem that you intended when you got involved. If you owned Bitcoin to get rich and it made you rich, then it was successful. If you owned Bitcoin to be able to circumvent, border limitations with money and banking, and it works for you on that day, then it's successful. If you're trying to evade some sort of censorship, whatever it may be, it's successful. But if it doesn't live up to those things in your specific situation, then it's not. Like if you end up getting caught because of, on-chain privacy isn't that great, or you end up getting, or your real life privacy isn't that great, or you end up buying the top and selling the bottom because you have no choice because of personal finances, then it didn't work for you. And so, it's okay to be realistic about all of this. The idea is just simply that Bitcoin does have a limited amount. Bitcoin is censorship resistant. And so if you want to focus on some of these qualities and bet and speculate on the future that this will turn out that the way you hope, go for it. So far, it's working out, in certain ways better than others, and maybe it will continue to do that.
That's super interesting of defining the success on an individual basis, because someone can hodl Bitcoin for 10 years and have great success by never selling and having kind of the vision that they had in the beginning played out, and someone had maybe the same vision, but they continuously sold it at the wrong times, so they didn't connected Bitcoin with success. So that's really interesting of like, it's an individual basis. And it's really hard to also, for me to find, I mean, the price is one aspect of it, to define one major metric of like, okay, how big is Bitcoin now? And the price is kind of an interesting one, but they're also more like, how many nodes do we have? How big is the mining hash rate? How many wallets with more than like, I don't know, like 1,000 Satoshis are there and stuff like that. Do you have any metric that you look at of kind of tracking the adoption of Bitcoin, the rate of adoption?
Well, I'll concede that for all qualities, the price is probably the best metric we have, because if the price is healthy, then it's because that there's a demand for it, right? Like it's just supply and demand. So as long as we're meeting, supply and demand is increasing, then the price will continue to go up. So it's a pretty good metric. Other things are much more difficult and unreliable to measure. Like we have some data that we can look at, but you have to really infer a lot. Like you have all the blockchain data. You can start looking at, how much people are spending on fees, how big the transactions they're sending are, but you don't know whether people are just mixing their own coins or sending things to themselves. Like you don't know a lot about the context of the transaction. So to measure the health through blockchain data isn't that useful. You could try to measure it by the mining difficulty and the hash power going up. But the problem with that is that there can be too much hash power. There can be more hash power than the market can bear. And so you can have a correction if too many miners speculate that they can make money mining Bitcoin. And so that's not a perfect measure either. Like it's not just a positive sum thing where the more hash power you get, the better. And doesn't mean that you can keep it. So every kind of way that you could look at Bitcoin and its statistics, there's all these caveats and nuances to it. And I wanted to make a follow-up point to your earlier topic, which is that one thing that's hard for Bitcoiners to understand or agree with is that there's no price in Bitcoin. Like there's no enforcement of the price. There's no liquidity in Bitcoin. There aren't even actually transactions in Bitcoin. There's just, you move the Bitcoin to another address. There's no peer-to-peer, like you get this, I get that. There's no trade, you know what I mean? And so there's no guarantee that Bitcoin, you'll be able to sell Bitcoin for the price that you need to sell it for when you need to sell it. And so even though we can speculate and say, oh, it looks like Bitcoin continues to go up and up and up over time, especially on the long term, that's just speculation. Like it could have a 5-year sideways behavior or a 10-year, getting stuck under $100,000. Like you have no idea what it's going to do. It's all based off of a sentiment of the people that own it and the people that are interested in own it and the actual supply and demand.
That's the ultimate free market Bitcoin, and it represents it kind of perfectly. And it's great to have that. I feel like.
Yeah, I mean, I don't know that. So I think it's a free money, and for lack of a better term, in other words, it's a market issued money, and so thus it is a good component of a free market. But having free markets is very difficult still. We can have, to some degree, free markets that are digital, like where you have like black markets on Tor and things like this. But in like the real world, in meat space, like you can't really run a business without being beholden to various laws and regulations and limitations, being forced to censor in various ways. And so there's definitely a limit to this as well as to how much we can claim we have a free market. And that's very much what we're trying to build with the atomic economy idea. It's basically saying, with all of the current technologies and things that we could design, what would be the optimal free market in digital system that we could have, a peer-to-peer open market that's at least in the digital sense.
It's interesting. It's also like, what does it mean to have a free market? if there's a system that's open but there are still taxes, is that a free market? Like how would you define a free market?
Free market is one that doesn't require intervention. So, like if the government is governing the market, it's not free. And so the free market is basically a market. So a free market isn't a place without rules. A free market is a place where only the people involved agree on the rules. And then a white market is one where you have this third party that's involved in everything. And so that's the difference. And so when you have a black market, you and the person you're trading with make the rules. And when you have a white market, the host makes the rules.
That makes a lot of sense. Do you see Bitcoin already as money for that black market, for that parallel economy? Is that already there, or needs there to be happen a lot more?
It could be better in the sense that while Bitcoin is inherently private on its own, in other words, there's no metadata about its users in there. There's not even financial data, right? Because the amounts are just, you don't know what people are doing when they make a Bitcoin transaction. They could be sending an NFT. They could be selling a UTXO as an exclusive club membership, and they just don't tell you how they're using that Bitcoin transaction. So there's not a lot that you can infer necessarily.
It's literally just like moving things around, and you don't know 100% what's going on. Let's come to the scaling part of Bitcoin, as you're with Synonym also working in that as a thing. How do we scale Bitcoin without losing the decentralization and being aware of the convenience that people seek usually?
I will say my answers are probably different than most people, and not exactly popular. But as far as how to scale Bitcoin, just there's a few ways to look at it. One, just by design, it literally does not scale. In other words, every single node has to do the same amount of work. There's no way to gain an efficiency by adding more nodes. So there's no efficiency gains that could be had in scaling with on-chain Bitcoin. Now, you can start to make these sort of like pseudo credit systems or pseudo trust systems, or these kind of games on layers like Lightning and things like this, where you have two people sharing, a UTXO and trying to, enforce the rules of that. But it's becoming clear that some of these things have a lot of limitations. And so my idea of scaling is that you have to try to find a sweet spot. You have to try to say, okay, yes, any amount of increase in cost is exclusive, and any amount of exclusion is centralization. And so if the fees for sending a Bitcoin transaction, for example, keep going up, then Bitcoin will keep becoming more centralized, because you're continually excluding the lower class of users by the higher the price goes up. The same is true if there's the cost to running a node, to be able to use Bitcoin in a self-sovereign way, verify the transactions you're receiving are real Bitcoin. If the cost to run a node goes up, you can be excluded. And so what we have to try to do is keep our finger on the pulse of technology. What are the trends and costs in hardware, hard drive space, connectivity, how fast are networks, what type of issues are people having with, downloading data from the blockchain and initial block downloads and this kind of thing, propagating data, what kind of latency are we having to propagate new blocks across the network, and identifying where the safe spots are. And so that way, when blocks are full for too long, we can make good arguments about whether or not to increase block size, and whether there are safe ways to do that without a hard fork, so like we did with Segwit, for example. But generally, we need any types of changes like this to be market driven, not engineer driven. We need it to be where it's just emergent that everybody wants bigger blocks. When that is the culture of things, then you can do it. We're nowhere near that right now. Most people are scared to even talk about the idea, never mind actually research how to do it and propose it as a soft fork. And the blocks aren't full right now anyway. So how are you going to convince anyone? It's just silly, right? You can't really take risks. So I would say I think it's worth, revisiting the idea of on-chain scaling within a sweet spot. but knowing that there's a limit to that eventually we hit a limit or we come too close to limits and we start excluding people because of the cost of running a node or the latency of the networks, et cetera. And so there's only like a sweet spot we can hit, and then we've done the best we can do, and we have to wait till technology advances further. And even if we get networks to be like the speed of light, which would be the ultimate limit, there's still a scaling limit there because the distance and the size of the Earth, you know what I mean, the time it takes for the speed of light to travel across the Earth, there's your minimum latency for propagating a block. So you have a lot of actual technical limitations to scaling, but I do think that there's more that could be done in the future with on-chain scaling. And I also think that there's less reason to be overly confident in layered scaling.
There's a lot in there. But is layered scaling still part of the solution?
Depends how you look at it. Like, for example, what Lightning does is it incorporates a little bit of trust and a little bit of self-enforcement. Like, you have to defend your channel. The Bitcoin blockchain doesn't do it for you. And it trades this trust dynamic. So you can have now the capability of doing many transactions off chain with one direct peer. And you can also now indirectly do this with other peers that they're connected to. But the main advantage, the core advantage of it is simply if you plan to do many transactions with one direct party, and you know that you're going to do those transactions and you trust them enough to have a Lightning channel with them, then you could save a decent amount of money by doing that instead of on-chain transactions. But there's all those caveats in there are true. Like, you can't just say Lightning is strictly better, it's cheaper, and everybody should use it, and there's no trade-offs. There's tons of trade-offs. There's a lot of complexity. There's chances that your channel will close when you don't want it to. There's chances that you won't be able to afford the enforcement transaction because when you do have a forced close, the fees are too high, or the fees are higher than the value you have in the channel. There's all kinds of weird dynamics that can happen. But I do think Lightning will always have a place at minimum with business-to-business transactions. So B2B, transacting in Bitcoin is something that could be done instead of credit terms and sort of normal credit terms where, like, I buy something from your business and then every 30 days we settle and I actually pay for it. You know what I mean? Instead of doing that, you can dynamically settle with Lightning and not have to worry about this like delay. And so there's these gains that definitely exchanges will have, large businesses that, accept Bitcoin, any type of merchant that is significant and doing business in Bitcoin with other businesses will definitely get an advantage out of Lightning. But that doesn't take us to millions of users. You know what I mean? That doesn't help us get to billions of users. It just helps us have businesses, which is probably more like in the thousands or at best tens of thousands that would be involved in this kind of thing. It gives them an option. So there is some scaling there, but it is a trust trade-off. It's not just a pure thing.
And it's interesting. How do you look at smaller transactions of like, okay, we have that parallel economy and I just want to buy like a very small thing, meaning being a coffee or like a small digital thing, like something that is very inexpensive. Would like those kind of use cases would then make more sense on layered technologies of like having, because you don't need that much trust and you can park small amounts of money in there. That way I kind of see of like the layered solution. I have a Lightning wallet where I don't know, keep €100 or something like that in there to pay every now and then for a restaurant, a bill or something like that. Not a lot of them accept it, but those that do, it's a really good experience. But it's all custodial, and I use.
Yeah, I was waiting for that. That was kind of my question.
Yeah. And I use Wallet of Satoshi for that because I don't currently. It's like even if they rug me, I don't really care. Like I see it as like my wallet that I have in my pocket. Someone can come up to me and steal it, and I would probably not even do something because there's nothing valuable in there. And like before they they shoot me or put a knife in my gut, I just let them take it. But where I never want to have the majority of my money there. My majority of money should be on the main layer. So that's why I'm really interested in like. How will we deal with that and as you said, like the main layer has limitations. Even if we increase the block size, there's only like so much we can increase. And if we are really like Bitcoin is successful, but if a lot of people use Bitcoin, we probably run into limitations of like doing the big and important transactions on chain, and maybe then coffee transactions on second layers or third layers or whatever we can do.
Well, there's some nuance here. I think that what we found and what I've learned is that when you start getting to really small transactions and really high frequency, you end up having to compare all solutions. And so, for example, it's not just whether or not people can use Lightning, right? In other words, or whether Lightning is even cheaper than using on-chain Bitcoin. It's whether or not making that coffee transaction is easier and cheaper with a credit card or with Wallet of Satoshi instead of running your own Lightning node. You know what I mean? So this is what these things, these solutions are competing against. And right now, what we see in the world is that the more quantity, the more high frequency, the smaller the transaction, the more trust is typically involved in the transaction. And so if the way to accomplish scale of micropayments is trust, then Bitcoin isn't part of that solution, right? Because Bitcoin is meant to be used in a trustless way. And so if you're using Bitcoin in trusted situations, why? Like you could use anything and you could trust with anything. Why trust with something extremely valuable? For example, your Wallet of Satoshi account, why not just give them $50 instead of Bitcoin? You know what I mean? Like if you have $50, because you're less worried about losing the $50 than you are the Bitcoin. But in the end, I think you do need trust to do these things because they simply can't scale something, especially Bitcoin, to be used for every day, every single tiny little transaction. It will just never happen. And it won't happen on Lightning either because it's limited by on-chain. In other words, the cost to make a Lightning channel, the cost to close a Lightning channel, the costs of your Lightning channel closing by mistake, the cost of locking up Bitcoin in those channels to provide liquidity to you, and what will that eventual market rate be for locking up that Bitcoin and putting it at risk in a hot wallet. And then you're comparing all those dynamics to, well, I could just use Wallet of Satoshi, or I could just use my credit card, or I could just use my bank. And as long as you can still do those things, you will. And your bank isn't very interested in censoring your coffee transactions, right? They're interested in censoring larger ones or more significant ones for different types of things. And so most people, most of the time, are going to do just fine using trusted solutions for micropayments. So do we want Bitcoin for coffee? Probably not. Do we want Bitcoin for as many transactions, as many as people as possible? Yes. And so another thing to think about is what will people use? Like I already mentioned, they will consider all the solutions. And so another thing nuance in here is, let's say they really do want to use Bitcoin. They don't want to use a bank. They don't want to use a custodial solution. What they might find is, what you might ask is, okay, why do they want a blockchain so bad? And will those people, when they can't afford Bitcoin, when Bitcoin doesn't scale to meet their needs, will they not just use a worse blockchain? And maybe we'll have like a ladder of blockchains where it's like Bitcoin is the top, it's the most secure, it's the most reliable, it's the most stable store of value and growing even. And then everything below it is like a spectrum of how close does it come to Bitcoin's security, censorship resistance, and speculative value.
It's also like for the smaller transactions of like coffees and stuff like that. I mean, Bitcoiners that kind of live on a Bitcoin standard, or like they have already income in Bitcoin, like myself. I think Jack Malice is also famous for doing that, and some others. They just have a credit card and pay once a month the credit card off with Bitcoin, and therefore they have like one Bitcoin transaction a month, but do the smaller transactions and interact with the fiat system.
Right. It's a lot like a Lightning channel, right? Like they once a month they top it up, or they make a channel, and then when the channel runs out, they top it up again. It's just a method of applying trust to be able to make things more affordable and faster.
Yeah, it's an interesting comparison because it's like
but it's not Bitcoin scaling.
Yeah, it's not Bitcoin. I mean, in a sense, you still use. You don't really use Bitcoin. That's true. Like you it helps you spend your Bitcoin in an indirect way. It's not really scaling.
It's bank scaling in the end, right? Like that's a tricky part when you get into conversations with Bitcoiners about the design of Bitcoin, et cetera, is when you talk about scaling, they often like change the definition of what they're scaling to suit the current topic, and they'll just keep changing the definition. Like, are we talking about scaling on chain? Are we talking about scaling the amount of people that hold Bitcoin with their own keys, the amount of people that use nodes, the amount of people that use Lightning, the amount of people that use banks? At some point you make a leap and you're not talking about Bitcoin anymore, right?
Yeah, that's true. Like even Lightning, it's like if we can build a lot of transactions on Lightning, we didn't scale Bitcoin in a definitional sense. We allowed more transactions on Lightning, and we are using Bitcoin. So it's more about scaling the use case of Bitcoin and less about scaling Bitcoin in itself when we go to the definitions.
Yeah.
Is that what kind of you're going with?
Lightning is in a nice sweet spot there, a nice gray area, like where at least Lightning is made out of Bitcoin transactions, right? Like every Lightning transaction is literally a Bitcoin transaction that could be sent on chain if the user wanted to. And so it is really Bitcoin. It's just all unconfirmed transactions, which most people don't consider to be real until they're confirmed, right? And so there's still trust involved, there's still uncertainty involved, there's still self-enforcement required, et cetera. But it's just that dynamic again of using trust to try to accomplish, more efficient, use of Bitcoin. Lightning is an interesting design, also Arc as well, which is kind of similar in that it actually uses Bitcoin transactions, whereas almost every other layer proposal for scaling isn't that. It's like using a separate blockchain, like for example, Liquid, which, when you try to categorize it, it isn't that much different than looking at an altcoin. It's just saying it's a separate blockchain. You convert your Bitcoin into the units of that blockchain, and now you trust these middlemen to redeem your real Bitcoin for their blockchain tokens someday. And so that's not really scaling either, right? It's scaling Liquid when you use it, because every transaction on Liquid will never happen on Bitcoin.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have two ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in a jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary, and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin BTC Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. Do you think we'll get a majority of people on Earth to use Bitcoin?
No. I think you get the majority of people on Earth to know that it's there and know that it's an option for them if they need it. And as time moves on, people will, get a better understanding, a better instinctive understanding of what it's for and when to use it and why. But it simply can't be used by everybody. And just by we see how it's playing out. You know what I mean? We watch that as soon as Bitcoin was invented, it caused more monies than ever to exist, not less, right? Like hyper-Bitcoinization didn't happen. We got hyper-shitcoinization. You know what I mean? We just got more and more altcoins. And so I think that we should look at reality and see how things have scaled, how things have, where successes have come. We see a lot of success with Tether. And I think there's a lot of reasons for that as well. And Tether is covering a lot of the kind of areas that some Bitcoiners wish Bitcoin would scale into, like micropayments, peer-to-peer commerce, this kind of thing. So we have to accept, and we should try to understand why all these things became true, not make up stories as to why they shouldn't be true.
It's like, the dilemma of like, you cannot have the most decentralized and robust system and paying a coffee with it. So like you can have one or the other basically, and we can integrate systems so the one system works really fine with the other one, but we cannot really scale the decentralized system to also work in the most scaled way possible. Is that what you're kind of going to?
Yeah, like when you're trying to work in distributed systems, you're always going to have a limitation for the overall scope of the system. You can't have a global peer-to-peer entirely system. Like, it just doesn't work. You end up needing to aggregate and index and coordinate, and you have all these different network behaviors that you have to make happen in order for the use cases that people actually use networks for to be possible. And you just can't scale Bitcoin in that way.
Interesting, yeah. Are you there's a lot of the community that focuses now on price, that focus on like ETF, on MicroStrategy, on like BlackRock, on like Bitcoin or the shitcoin reserve strategy. Are we too focused on just the price going up and not enough on the actual technology and actual making Bitcoin a viable money?
Maybe. Again, too much is subjective, right? So I don't know what is too much. In my opinion, too many people care too much about that to a degree where they accept a lot of their own ignorance. In other words, they listen for the things they want to hear, and then they learn weird understandings of Bitcoin, and they try to build on those weird understandings, and they end up having a pretty malformed, vision of Bitcoin that just only fits the idea of number go up. And it just isn't that simple, and it isn't that true. So I do think that there's a bit too much focus on that, especially the idea of white market Bitcoin. In other words, stuff in ETFs, stuff involved with the government. These things are not going to work out well for people, because in the end, the true core value of Bitcoin is in censorship resistance. And when it comes time to lever that and use that censorship resistance, the government's going to counter and react the opposite way. They're not going to be like, oh yeah, this is great. We love having a strategic Bitcoin reserve where all the Bitcoiners just tell us to fuck off and do what they want. Like, that's not going to be compatible, and they're going to end up trying to control Bitcoin, or define how you can or can't use it, trying to make sure every business entity out there is censoring to their liking, miners, lightning nodes, whatever it may be. The more successful it becomes, the more they'll behave that way. And so I think we should be focusing more on how we can avoid that, how we can avoid, government being able to influence Bitcoin's protocol, influence its design, influence how people use it, influence the rights and the laws around it. Honestly, the only political or white market behavior I can justify is fighting for Bitcoin rights. In other words, putting it into law that I can have a Bitcoin wallet, that I can, sell anything I want, sell for Bitcoin instead of for dollars, or things that I'm explicitly allowed to do, instead of rules about how I can do things, you know what I mean? Or whether I can do things. These regulations, basically, like, we don't need more regulations. We really don't. All of the crimes that have been committed around securities and finance have been documented and dealt with. And the Bitcoin ones aren't that new. They're just a combination of existing, crimes. And so we don't need regulatory clarity. What we need is Bitcoin rights. I have seen a little bit of that, which I like, but not nearly enough. It's mostly about trying to find ways to get the government to pump our bags.
Is that maybe even like a threat to Bitcoin if the community is too focused on that, and implementing change on Bitcoin always requires consensus and a broad thing of like, if we are too focused on that, it might lead to something that we don't want, with BlackRock and governments and big institutions get behind that?
Definitely. Like, there's a budget, an invisible budget for every idea and every industry and every, project. And when your mental budget, your attention, your actual budget, how you invest money in startups and businesses and things like this, when it starts getting distorted over to legacy financial interests, political interests, making politicians interested, educating politicians, educating, Congress. And when you start biasing yourself towards that, you're biasing yourself to government dependence. And so the more we bias as a culture, as our money, we become those things. And so if we were to have a culture that was more biased towards privacy, censorship resistance, free markets, voluntarism, all these kinds of concepts, then people would be investing in different types of businesses. They'd be building different things. They'd be, different types of people working on the protocol. And yeah, I think our culture will definitely affect what Bitcoin is, because Bitcoin is people. It's not just some sort of like magical, law of physics that was invented. It's just people running computers. And if those people decide to think differently and behave differently, and they do it as a group, things will change. And so we do have to be mindful about where we put our kind of mental and financial budgets.
Very true. Absolutely. Our fun one. Is a KYC Bitcoin the same as a non-KYC Bitcoin?
Depends who you ask, right? Like, Bitcoin doesn't decide. The cool thing about Bitcoin is, because it being censorship resistant, it doesn't decide what's okay, right? But your counterparty has every right to decide what's okay. In other words, Bitcoin is perfect for a free market. And when we defined free markets earlier, it's just when you and your counterparty agree on the rules. Well, if your counterparty says you have to show me your ID in order to pay in Bitcoin, then that's the only way you're going to do business with that counterparty. Whether he says it because the government told him to, or because he needs that information to feel like he can trust you. And so, you can't stop that. Your counterparty can censor you or deny doing business with you. And if you become somebody that nobody wants to do business with for some reason other than the government said, then nobody will do business with you regardless of your Bitcoin. So,
I do hope that the non-KYC Bitcoin are allowed in the white market and in the future. But it seems like there's
for
a
now,
big
it
chance.
seems like they mostly can. You do have like some people getting flagged when they're doing coin joins, or when you are touching an OFAC listed address. Like, there's still some kind of censorship and things that get flagged in that way. But for the most part, there's not a lot of like really angling out anything that's not white market Bitcoin. It's getting worse though. Things like the flight rule, MiCA regulations, these kinds of things get us closer and closer and closer to white market Bitcoin being the only sanctioned Bitcoin, and black market being portrayed as criminal. And remember, black market doesn't mean criminal. It just means not following the law. And so just because you don't consider the regulations or laws when you use Bitcoin doesn't necessarily mean you're doing something bad, or doesn't even mean you're breaking the law. It just means you're doing it without consulting the law, without worrying about or considering the law.
Yeah, there's this difference between doing the right thing and doing the legal thing. Like
There
this,
is,
those
yeah, there often is a big difference. Yeah.
doesn't need to be the same thing.
I
Sometimes,
shouldn't be too negative. Like all of that said, like most laws exist for good reasons. Most of the intent of humanity to get other humans to behave is a natural and organic and meaningful or moral intent. But we do get lost in this negotiating of telling other people what they should or shouldn't do.
yeah, and I get really frustrated when people try to explain like, oh, like we have to do it that way because that's the law. And I'm like, okay, but why not go to first principles and ask ourselves, is that the right thing to do? Like, is that a good thing to
Well, it
do?
depends on the context, right? Like if it's just a personal thing between two people, you're a little more free to get away with just making your own rules. But when you're a business, you don't have as much freedom because now you have more scrutiny, you have more reporting. Depending on the country you're in, it will, could be worse or better. But in the end, like as a business, you have a physical location. They can find you, they can hold you accountable, they can hold all of your shareholders accountable, and so you become more part of the state. The bigger your business is, the more money your business makes, these kinds of things.
Yeah, you kind of have to be aware of where you start your business. You could make
Yeah,
a difference.
it's a big thing now. I don't think there's any startup anymore that, at least, well, American ones tend to be American centric and they'll just default to opening their startup in America. But startups outside of the US definitely are like asking their lawyer, where should we form this business? And because most of these businesses are like mostly remote or totally remote, and so they can operate out of anywhere. And yes, for the most part, many Bitcoin and crypto businesses are strategically choosing where to register their business based on regulations.
Where would you open a Bitcoin business currently? Do you have like favorite locations where you look for that?
No, I'll say that it's not my job to strategize and worry about that. It's lawyers' jobs. And our lawyers initially had us in British Virgin Islands, BVI, and recently moved us to El Salvador. So, yeah.
Oh, welcome to El Salvador.
I
I'm not in
mean,
the.
we don't work from there, but yes, our business is based out of there. And just so the audience understands, our company Synonym is majority owned by Tether, and so Tether, has been working more with El Salvador and is moving some of their companies to El Salvador. So it's part of a wider strategic choice, I think. So I wasn't really too involved within it, and I don't really care where the business is located as long as it's not worse than where we were before. So yeah, I think it's interesting, and I hope it'll turn into something of a benefit for us at some point.
Really cool. How do you look at El Salvador? Were you already visiting yourself also?
I've been there 3 times, all three to speak at conferences. I hadn't been there in 2 years until recently. I went in January for the Plan B conference. I was in Bitcoin through the whole thing, right? Like I remember when Jack Mallers went on stage announcing that El Salvador was making it legal tender. It was just like one of the biggest news moments for Bitcoiners. For Bitcoiners that have Bitcoin ethos, you could say. It was a big moment, like a lot of people were really proud of that and really happy to see that happening. I think as it played out, we saw that El Salvador's Bitcoin appetite was bigger than they could actually digest. And so getting, adoption through getting Chivo working, getting merchants to use it, getting Bitcoin off the ground there, it looked like it was going to hold for a while, but it kind of slipped. And now with the IMF dealings, it looks like it's going to totally slip. So I don't really know what the future of Bitcoin is in El Salvador. I think there is still a special future there for it, but it's obviously been dampened by their need for money from us.
I mean, it probably takes like they tried from top down, and Bitcoin is not made for that. I feel like it's like a grassroots movement, and
maybe I think it needs to be more extreme though. Like they would have had to like not use dollars and say use Bitcoin, or have some sort of much deeper plan for integrating it into the system and making it more natural. But I don't think it's too much work. It's too hard. A government is like not really good at anything, like they're not agile. They're not intelligent. Well, they're not agile. Let's just put it that way. And so pulling something like this off was destined to be unlikely. And then they doubled down. They wanted to do Bitcoin City and volcano mining, and they were just going to do all the dreams. Obviously, they were never going to live up to that scope, and so they had to pull back. And now with the IMF stuff, I think it's just even worse. So I think there'll still be conferences there. I think there'll still be Bitcoin beach communities and this kind of thing there. I just think it's going to be a much longer term, adoption and interest.
But the IMF, from what I understood, was basically they don't enforce it anymore, or is there more to that deal? Like what I understand, like they don't enforce that Bitcoin is accepted anymore, which, from my understanding, they never really did. I mean, they had the law, but most don't have accepted anyways.
Did you see the latest news today or yesterday with the updates?
No, probably not.
So in general, what the IMF was trying to do with defining the deal was as politely and as gray area worded as possible, tell El Salvador that they just can't do Bitcoin stuff anymore. In other words, they don't want them to be having a Chivo, trying to get people to adopt it. They don't want to have them tweeting about how great it is and buying it and tweeting all of their Bitcoin buys. What they were trying to do is get all of that to stop. They don't want a country supporting Bitcoin that way, and especially one that they can hold leverage over with their loaning and such. And so the most recent update that came out to the requirements is they're explicitly telling them to stop buying Bitcoin. And so initially it was more, I think they just wanted to get rid of the legal tender aspect, because I think that was causing some complications in other conversations about what legal tender is and whether Bitcoin, is money, whether it should be taxed, these kinds of things. And they didn't want to have, that example out in the wild. And so they wanted to squash that. And now that they see that didn't stop El Salvador from being, a Bitcoin evangelist, they want to also stop the Bitcoin buying. And they're telling El Salvador that basically to continue to get the loan payments, they have to make the only way that they acquire Bitcoin be through confiscation in legal matters. In other words, when a hacker gets caught or a thief gets caught, whatever, then they can hold that Bitcoin, but they can't buy it anymore.
It's fun when America buys it, but then the IMF tells
well, America hasn't bought it yet, technically. So the IMF might not be happy with them either. I don't really know the dynamics between the US and IMF, but the strategic Bitcoin reserve doesn't exist yet. It's just a pump narrative at the moment. It's like the opposite of like when China bans Bitcoin. It's like Trump buys Bitcoin. Like, no, like we just saw they announced it. They botched the announcement. And then it went back to the lower price again. So it was just a total speculative move. And we don't know. Maybe Trump and some people around him are interested in manipulating the Bitcoin price and don't really care too much about, making it an American, dream and the crypto capital of the world,
I just because I think I saw it on the feed, and I want to pull it up because maybe you have more information on that. Because is that Naib's reaction to the IMF of like because now 16 hours ago, literally, he posted the holdings.
That was right before the IMF announcements.
So that was right before. Interesting.
Yeah, like it either came out last night or this morning, where the details came out. I think it was today actually, but I wasn't following it closely enough to see when it actually was released. But everybody's talking about it right now on X.
Interesting. Yeah. Ever since I have the podcast, I get my news from the guests more or less, which is calming.
Yeah,
more than the Twitter
X is
feed.
my news at this point. It's like I wake up in the morning and read my newspaper, which is just basically reading my feed.
Yeah, it's definitely better than newspaper. I, I, tr- I also do that, but I try to get off to as much as possible. But yeah, that's super interesting. When we have El Salvador, they basically try to escape that fiat system, but it's hard. They have a lot of mechanisms to capture El Salvador, and El Salvador still has the dollar. Like they still transact with the dollar. Almost every transactions, the most volume and the most transactions from El Salvador is in US dollars. And I was there in November, where the law that they have to enforce Bitcoin was still there, and I couldn't pay a lot with Bitcoin, mostly just around the conferences. But if you go outside and just go on your own and go somewhere, they don't accept it. And it's funny. I went to the volcano in San Salvador, and I was like, "Hey, can I pay with Bitcoin here?" And they're like, "No, you can only pay with physical cash." And I was like, "I don't have physical cash." And they're like, "Ah, you can just go in there for free." And I was like, it was the entry fee for like $2, and I was like, "Okay, but can I gift you Bitcoins? Like, I still want to pay you." And they're like, "No." And I was like, "You don't give it, even take it as a gift." But
Yeah.
yeah, like there's a lot of work to be done if you really want to be Bitcoin standard. It probably takes way longer than anyone anticipated.
I don't think there's any reason to force it. I think that, like I said earlier, I think that making it legal tender was good. They were giving people a right. They were saying, I think the way legal tender works as a concept is it just means that if you make a contract with someone, that you are forced to accept Bitcoin as one of the payment methods. And so, when you're at a merchant buying a coffee, it's an implied contract, but for real contracts, it's interesting to say, okay, if I want to denominate this contract in Bitcoin, I can, and nobody can stop me. Yeah, I think it was nice to have that gain, but in the end, like it didn't play out. I would say it's easy as a Bitcoiner to be unhappy and say, oh, this narrative is not there to pump my bags the way it used to be, or the dream of a country, being on the Bitcoin standard is not working out. But I also think we have to be reasonable and think the odds are pretty high that Bukele made a rational decision. You know what I mean? He probably looked at it and said, well, I can make all of Bitcoin Twitter happy, or I can make all of the El Salvadoran people have a better life. And he probably made the decision he thought was best, in all odds. It's just that Bitcoiners are disappointed with that. And that's life, like I think the odds are pretty high that was the best option for him in El Salvador. And that's the way it's going to be. I don't know, maybe he could have gotten the money from Tether or something. But what are his options? If he has grand plans for his country and he really wants to turn it around and make it into a relevant thing and increase the standard of living for all of his people, maybe the IMF deal was the best option.
I think people also they assumed it's like, oh, like they are now doing legal tender, they are buying Bitcoin, there will be a Bitcoin country in 5 years. Like even without the IMF news, that takes way longer. Like even if the IMF deal wasn't there at all, it's still reality that most people don't transact in Bitcoin in El Salvador today, and also not in November, December. So things take longer than the hype rally things to
Yeah,
do.
like the Bitcoin City plan they had, like that's something you talk about doing over decades, not 5 years.
Absolutely. I have one question that I ask each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Depends on the topic. I've lived a interesting and very varied life. So I've been various types of designer, illustrator, artist. I've been in the music industry. I used to run a record label. I was in a punk band. I am very interested in topics related to Bitcoin, like the actual economics of how it works. Yeah, I mean, I can talk on a lot of topics, but I try to avoid, talking too much about topics I don't have a lot of experience in. So yeah, I would say, I'm happy to explain any experience that I have or anything that I've learned in other areas, but probably design or like, peer-to-peer system architecture. These things that are my current biggest interests. Yeah, I don't know. I've been using AI a lot. I'm working on a side project making using AI to make different kinds of fashion. So yeah, just random things.
AI is a game changer. It's like the podcast wouldn't even be here without it
Oh yeah,
at
how are
this
you
point.
using it?
There are three different things. The first thing is just the research of the guest. Before I used AI, I needed like 20, 25 minutes to figure out what the guest is about, like just like watching a little bit of video, like doing those things. Now I have a process where basically in like 5 to 15 minutes, I get like 2-3x the information about the guest. So I just put it in ChatGPT, have a custom GPT, and I put in transcripts of recent video podcasts he has done. And it's literally just takes me 3-4 minutes to gather the data and put it in the custom GPT. And then I get basically a one-sider of like, okay, those are interesting topics he usually touches on. Those are his 5 most controversial topics that he usually talks. Those are 5 interesting questions that he rarely talks about, but could be interesting to talk about. So just like figuring out in what direction it might go. And it turned my time of preparing for podcast from like half an hour to like now like 10, maybe 15 minutes, depending on the guest I take for doing that. Then with recording it, it's in Riverside. They do transcript, they do summaries, they do the timestamps and all those things automatically. So I just like have to copy and paste it. And then in post-production, now I have 2 employees that do the post-production, but like a week ago, literally, I did it myself still. And there I use AI to figure out, okay, what are interesting sound bites of the podcast, to put a trailer in front of, or like an introduction in front of the podcast to make it more interesting. Even for thumbnail and title design, I have custom GPTs of like, okay, here's the introduction, here's the transcript. What could be an interesting thumbnail? Give me 5 variations just to get some ideas going. And there are many more small ways where I use it. But I think those are like the bigger ones. And I said it, and that without it, it wouldn't be the podcast possible, because I did a daily Bitcoin podcast, like every day, an interview like that with a different person. And just time wise, it wouldn't have been possible because I was alone and there was no post production, and there's like clips and all the things that you have to do. So now AI was making me way more efficient, so I could actually do it in the time needed to do that. Otherwise, I probably only could have done maybe 3 or 4 podcasts, or maybe 5 if good, but definitely not 7 with a sane mind and also making the quality good.
No, that's interesting. It sounds exactly like what you should be doing. You know, like I'm using AI pretty much every day, and to use it to do things like make a, like for you, like a script of questions based off of a bunch of data and based off of a specific context. Like that's really interesting. I feel bad for people that aren't using AI because it's just like it's already at a stage where you're not really competitive if you're not using it, and it definitely like can be an unlocker. You know, like when you have a blocker on something, like you don't want to write that blog post, or you don't want to edit that video, or you just don't want to have to figure something out. You don't want to read that white paper, whatever it may be. Like you can make your job much more digestible. One interesting thing lately I realized is, I don't remember. I think Brandolini's principle, the one where it takes 10 times more work to refute bullshit than to create it. And I pointed out to Eric Voskuil last week that that's not true anymore, because with AI, we can refute bullshit with AI. So I can just take the whole conversation, put it in the AI and say, write a reply to this guy and refute everything stupid he said. And then it will write it for me. And then now he has to read my bullshit. And so it's a nice bullshit defense system. And I've been using it that way too.
Of course, I have something that I when something in a software that I use I don't like, or like there's a bug that costs me money or time, I was always too lazy to write a complaint email. Now I have ChatGPT and say like, hey, this spark happened. Because of that, I have a delay. And I was just like, hey, write a long email, one that asks for a refund. And actually, I have a really high rate of getting a small refund. Usually not the full one, of course, but like a small one. And it's just like giving a small task literally takes like 1 minute to put it in ChatGPT, get the output, send the email, and then like 5 hours later, oh, sorry, that happened here, $20 of refund. And I'm like, that cost me like a minute to do, and it's a small refund. I mean, I'm not making money with that, but just the sheer amount of like you can put something in and it makes things for you. Also, like responding to emails, I caught myself using it more and more of like I just put in the email, put it in my folder of email responses that I have, and then let the response be generated and put the response there and just read over it. And usually I change a little bit, but I also put the change in there so they learn from it. And lately I don't change a lot. Like they nail how I write email, like ChatGPT nails how I write emails. And it sounds good. Like, I wouldn't change a word and just send it. I was like, that email was completely written by ChatGPT and it's good. It's probably better than me.
One thing I do with it is like I use AI to either make what I've written sound more or less like me. And so like I've spent some time with it explaining like how I write, what I like about how I write, this kind of thing. But also I know that I can be, a little aggressive or offensive to people. So once in a while when I'm like, okay, I really want to say all this, but I don't want to offend this person, I'll say, say this in a simpler way and be more professional and polite. And then I'll have it rewrite what I was going to say. Or the opposite. I'll say, I really want to like take down something or like, make an idea, totally refute an idea and dunk on it and kill it. And I'll have it help me write something. And I'll be like, this is just not me enough. It needs to be more witty, more cutting, more surgically precise. And then I'll have it rewrite it until.
Oh gosh, that's so funny. Literally today, I did the same thing. The landlord of mine, hope he doesn't watch, but maybe he watches. He sent me a WhatsApp message, and I was like, oh. That really gets me going. Like it really it made me angry, and then I was writing all the things, and I was like, it's probably not a good idea to send it like that. I took the text, put it in ChatGPT, and said like, make it friendly and a little bit more professional, so he doesn't kick me out tomorrow. And it's like. Oh yeah, it actually reads nice. Like it's almost like a compliment. It says the same thing, but it almost complements the other one. So. And I do feel bad for the people, like the same way with Bitcoin. I do feel bad for people that don't use Bitcoin or AI or all those great technologies that enhance your life so great. Why don't you do that?
It doesn't matter what you do. If you're a designer, an artist, a programmer, a business developer, whatever you do, there's some way that AI could be enhancing what you're doing. And you kind of have to now because there are other people that are doing that and you won't be able to compete.
Yeah, and some people still argue if it's a good thing or not a good thing, and the other people just use it to make life easier. Really cool. Thank you so much. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. The question from the previous guest is one that actually came, I think, like 2-3 times already for the end routine question. If you couldn't invest in Bitcoin or in a Bitcoin related asset or company, where would you invest in?
Probably a startup. I would probably start another business and, try to leverage whatever savings I had that way to make profit by producing something. That's probably more risky than my answer should be, but that's the first thing that comes to mind is, I'd probably just take the money and invest it into a business venture. Otherwise, maybe some real estate just because I don't own any property right now. And it's been a relatively practical, safe way to, store your value for a long time.
Absolutely. And real estate is going up only if you denominate in Bitcoin, then it's crashing down. Really cool. Thank you so much, John, for being on my podcast. Before I let you go, where can people find you, ask you questions, and reach out to you?
Sure. Yeah. I'll just take a quick minute because we didn't talk too much about our products and business. So I'll just mention a couple of those. So the name of the company is Synonym. If you want to learn about the company or what jobs we have open and that kind of thing, you can go to synonym.to. We also have a mobile app called BitKit, which is on-chain Bitcoin and Lightning. It has a Lightning node in the app, so it's all entirely self-custodial. You can learn more about that at bitkit.to. We also have Blocktank, which is blocktank.to, which is a place where you can buy Lightning channels, and it also powers the Lightning channel purchases in BitKit. And then finally, we have PubKey, which is kind of two aspects to that: PubKey protocol, PubKey core, and then the PubKey app. This is basically a new web protocol that we made where you can use keys as a domain name, like public keys. And then from that derivative, now you don't have to be censored or trusting ICANN in regular DNS. You can use DNS that's based off of your own key, and using the largest, most decentralized network in the world to resolve that key to a website or location in the internet, mainline DHT, which is the network that powers torrents. And so we basically store your key signed DNS records in there. So if you're interested in building in peer-to-peer web tech, you can check out PubKey Core. That's at pubkey.org. And then at pubkey.app, you can see a preview of an app that we're building to kind of interface with this whole new web paradigm. And all of these things are kind of works in progress that we intend to all integrate with each other to create this kind of atomic economy that we described earlier. And if you want to find me, I am Bitcoin Error Log on Twitter and on Telegram. And I do many interviews and say many provocative things if you're interested.
I think you say really reasonable things, honestly.
I think so too, but some people don't.
Maybe I think on Twitter it's people like to be aggressive more. It's like this meme of like two people on Twitter, they're like, and then like in real life they're like puppies to each other. So I think it's more about Twitter and less about you.
Yeah. I think that social media really is like a marketplace of ideas, and they're all competing and being mutated by people. So people get, defensive and aggressive because every little thing is competing with every little thing. And so it's just a real dopamine hit, and everybody's just stuck there.
Absolutely. By the way, on PubKey, when you talked about it, I always have to think about the bar in New York City. I never was there, but I really want to go there someday. Yeah, really cool. Thank you so much, John, for being on. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.